What's going on, everybody? It's your boy C-Zar, and we are talking about ZBCN, Zebec today. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. It is the 29th day of October, and here we are sitting at about $0.0038 right now, 9 hours and 47 minutes left in the day. We're up a little bit on the day, but moving sideways more or less. We've been pretty boring since the 17th of October. Here we are on the 29th, about 2 weeks later. We had the fake out dump from this range, which again, I think it's important to mention that if we look at this from the context of a horizontal support level, we had a breakout, but it was a fake out. We came all the way down and we actually bounced right back up. And where did we bounce from? From a low to a high here, not the fake out high, but the actual high. You bounce right off the golden ratio. And if you want to take the actual high too, that's fine, but you bounce right off the golden ratio. Immaculate reaction. We're back testing this same level that we found support at before for support now, and we're finding it. And I think that this is a bullish foreshadowing of the days to come, of the weeks to come. I highly doubt that we break back below this level, and if we do, I very much even more doubt that we go below this low here. Okay. Time will tell. We'll see how it goes, but let's look at the short-term stuff. All right, we'll zoom out from there. Looking at the 1 hour time frame now. And let's actually, I don't care if we have volume on this one. I don't think it's important. We're just moving sideways. So looking at the RSI, we're bouncing off the oversold zone, coming up. I mean, looking productive more than not. So getting overbought, not getting oversold, that's a point in the favor of the bulls. Being above the 50, not below the 50, that's a point in the favor of the bulls. You rejected this area but came back up. That's nice. 46 minutes left in this 1 hour time frame. Let's see how it goes. I kind of am expecting Bitcoin and perhaps the rest of crypto to pull back too. So again, it is possible that we do pull back slightly below this level or to some kind of degree a higher low. Anything's possible. If you're looking at this and thinking, well, this is a head and shoulders pattern. No, it's not. Head and shoulders don't form at the bottoms, though. To be fair, with a left shoulder here, a head here, and a right shoulder here, it does look pretty good. But again, head and shoulders patterns don't form at the bottom of a trend. They form at the top of a trend. So is it possible that it performs like one? Maybe. Maybe we do see slightly lower prices. And again, at which case, if we do go below here, we probably hold this level for support, right? The same level that we'd held as support for quite some time. So I wouldn't expect that we go below 0.0035. Let's just leave it at that. But here we are at 0.00379. If we do go lower, anything and everything in between is possible. Looking at the 1 hour time frame again, the RSI I like, the stochastics I like as well, and the MACD is even starting to shape up and look nice as well. But just in the midst of Bitcoin seeing some volatility today, might we go down? You know, there's this thought, and Benjamin Cohen, I think is how you pronounce it, said, will the Federal Reserve announce an end to QT today? If that happens, the whole market's going to pump. TA's out the window. Logic steps in, and logic says it's time to buy. If quantitative tightening is coming to an end, you buy. You get in the markets, okay? Fed's not offloading their balance sheet anymore. It's time to get in. We look at this here on a 4 hour time frame. The RSI is bouncing at the same areas that it typically does bounce. You just hate getting oversold, man. And I love that. That's amazing. You've been below the 50 now for quite some time. I think that you should get back above it here. And with this, next candle, 1 hour, 44 minutes left. If we can close this green or higher than where we are now, we would definitely push past the 50, and that would look good. Rejecting the 50 is not good, but rejecting it and then coming back up and breaking through it relatively immediately, that is good. So hopefully we can do that and absolve ourselves of going lower. Again, at this point in time, I'm not really, I would say my call is that we're moving higher. We're moving up from here. That's my call. But to kind of be on red alert, yellow alert for the potential break down from this level and maybe down to this area here, we could go down to about 0.035. I'm not saying that we will. I'm just saying if we do, it's okay. It's not a problem. We do have bullish divergence on the stochastics. The stochastics on the 4 hour are really reinforcing the idea that we do continue to move higher going into today's FOMC meeting. So that's nice. The MACD finding support here at the zero. It's very common. We've seen this happen a lot lately where the MACD will break right above the zero here. Let's see. Let's get it. Where you break right above the zero, and then from that point on, you're kind of in this consolidation phase. And then once you actually get that separation from the zero, once the oscillators actually turn up and start to move higher, that's when the big move comes. So regardless of what happens, Zebecians, regardless of what happens, whether I'm right and you move up immediately, or I'm wrong and you move down immediately and then you move up, the next move up should be good. The next move up, when it comes, should be good. And when I say the next move, you'll know it because it'll take you above 0.00414. When you're above 0.00414, you can expect prices probably to just slingshot all the way up to 0.005 and beyond. That would be my genuine guess. Okay, looking at what we're seeing here, I really think, I mean, just being here in the stochastics, you're set up for it. The MACD is set up for it, and the RSI. I mean, I wouldn't say it's necessarily set up for that, but just with the other two things, I think we could very much forecast that. And you've got a lot of growth to go before you get overbought, and you could definitely get deep into those readings as well. Looking at the daily time frame here, we don't have bullish divergence on the MACD, and that's fine. Consolidating, whatever. The MACD might be less reliable because you have been moving sideways for so long. So on the daily time frame, this MACD might be unreliable. I think we've concluded that, haven't we? Because as soon as you crossed up, that was the top. As soon as you flip green here, that was the top. As soon as you flip red, you get your deep red histogram. You're at your low. Like, it's been deceitful, and that's because you're moving sideways. So the MACD might not be as important. Stochastics, again, this is an issue. This is an issue. Is that finding support here is just not something that you do. You know, you find support here a little bit higher, and we tried, but it failed. This is kind of an issue. It's not that you can't find support in this area, right? You don't even need an example of it. You have found support before in this area. You don't need an example to validate it. It's possible anyways, but I just don't like the idea of you. I'd feel much more confident about finding a low here if we were in the oversold zone, and that's something that does make me cautious to be bullish here as well. So again, just keep your mind open to the idea that we could drop a little bit lower. I'm not saying that we will. I'm just saying out of all the things we've looked at, I'm bullish on the idea that we do move higher from here. But this ties me up every single time. This ties me up almost every single time. So the RSI on the daily time frame looks good, bouncing off the 40. I don't like that you bounce off the 40 just to reject the 50, but you can move up. I mean, we've done that before. Bounce off the 40, rejected the 50, bounce off the 40 again, and moved up, right? Here you bounce off the 40, found a little turbulence here, but then you continue to move up. You did the same thing here a couple of times, and then you finally moved up, right? It's really not that big of a deal, but just get back. Whenever you do move back up here, get above the 50. We want higher highs, not lower highs in the RSI, okay? Thinking you're going to break out, really we're just, what's the word I'm looking for? Beating around the bush here, talking about the ultimate endeavor, because what's going to happen in the short term, whether you go down to 0.035 or somewhere in between where you are now in that price or even a little bit lower, this is just insignificant compared to what's coming, right? Go lower. Go twice as low. Go all the way down to 0.029. It doesn't matter. What's coming is going to be very significant as far as upside price action goes. From a high to a low, you hit your. And we don't normally talk about this fib, okay? But I want to use it because I think it's telling us a story here, right? High to low, consolidated below the 0.5 consistently. You interacted with your golden ratio for the first time and found resistance. It's actually very common to do that. It's actually kind of a gift that you did that, right? Because you had a second opportunity here to buy at the lows. And then what'd you do? You broke above your golden ratio for the first time on a daily closing basis, found support at it on a closing basis. You wicked down to the 0.5, went all the way up just above the 1414, and then you came back down. It's actually very common to wick just above the 1414 like that. That's typically where you stop. Came back down to the 786, showing a little bit of deconstructiveness by finding a lower high here, but now you're finding a higher low at the 886. That's powerful. Almost always in a situation like this, would you at least move up to the golden ratio, right, in a very short amount of time. But we know better than that. You're probably not going to move up to the golden ratio. You're probably going to move through it because, again, this breakout, in the context of fibs, this might be the next target area because we haven't interacted with it yet. But in the context of this move, right, you moved up here, you consolidated like this, you're probably not going to get a move that's just this big. You're probably going to get a move that's more representative of what you had back here, right? So with that, I would say really the next quote-unquote target, the next target should be considered as like 1.38 to 1.65 cents. But that's still on the low end, right? Because in the context of this overall move from a low here to a high there, you're still drawing the short straw with a breakout from this area here, right? Really, I would think that you see something closer closer to the length of this move, if not even beyond that, right? If not even higher, because this was testing the waters. You had some people who read about you, they took a shot in the dark, they invested in you, and they were rewarded handsomely. You had people who were aware of you, who didn't invest in you, and now that you've moved up, now they're like, okay, I messed up this chance, but I'm not going to mess up this one. It's going to move up higher, right? You've got a whole different class. You've proven yourself. So now that you've proven yourself, I think you're going to cut loose. And typically in these movements, the way that you have it here, I would expect a 1, 2, 3, 4, 5-legged move. I would expect what they call a motive wave, an impulsive count, or an impulsive wave. Let's see, what is it? It's a Elliott impulse wave right here. 5 count, right? Isn't that a motive wave? I don't know. I'm trying to learn. And at any rate, the third leg, which would be here, right? Because we've, let me just start fresh so that it's all clean. Because we've moved up once, one move here. The second move is the consolidation phase as a whole. And then the third move would be this one. The third leg is typically bigger than the first leg. So if this is a measurement of the first leg and the breakout happens here, I mean, theoretically, then we should be moving up to higher prices. Whoops. I didn't know that I moved this. We should be moving up to higher prices than what this offered. So 4.4 cents is looking really appetizing. 9.7 cents, something in this range, is looking really appetizing. 4.4 cents to 9.7 cents, that's the range that we come up with using this fib. And again, the true minimum target I think to consider would be about like 1.38 cents. And maybe we're there. Maybe we stop at 1.38 cents momentarily, but I would expect that we do pursue higher prices. This 4.4 cent and beyond is something that we anticipate to happen by the end of the year, if not by the end of November. If you move at the same pace you did last time, absolutely by the end of November you could be up here. If not, certainly sometime in December. The maximum effect would be about 10 cents. That's a nice psychological area of resistance. It's about a 25x. But if we delete the chicken scratch, hold on. We delete the chicken scratch here, and we draw a high to a low of this overall pattern, this consolidation phase, the 2618 lines up perfectly with this 2618. So that's nice. That's actually very suggestive that we do find resistance there. And then the 2886, 3113, they don't really line up with the top limits here. I don't know if we hit 10 cents. I would expect, I suppose, that we find resistance at 8 cents or lower, somewhere between 4.5 to 8 cents. There's a lot of congruence here, and I feel very confident that that's where we will be likely by the end of 2025. I would think that most of this move happens in November. We're probably well on our way above like 3 cents or above 2.5 cents by the end of November. But that 4.4 cent to 9.7 cent area, really the 4.4 to 8 cent area, is reserved, I think, for December. So that's where I think we're going to go ultimately. And then, from there, we'll consolidate again and then have one last finale finish. Again, these impulse wave counts, they're typically 1, 2, 3, 4, 5-legged counts, right? Like if we move over here, you can see 1, 2, 3, 4, 5, right? That's the amount of counts that we get. We're in the process of forming our third leg. We're in the second leg right now, talking about the prospects of the third leg, which then would imply another consolidation phase, your fourth leg, which leads you up to your fifth leg, your finale move, which could be bigger than your third leg, but likely is smaller than the third leg, yet bigger than the first leg, if that makes sense. Anyways, I got nothing else for you guys. I want to run with this thought again. Actually, hold on real quick. I do want to run with this thought while I got all the chicken scratch on here. Because if this move, if the third leg is bigger, we would at least stop at the 236, or the 2618. And I would think that we do stop higher. But let's just presume we stop at the 2618. The fifth leg then would be likely still bigger than the first leg, but smaller than the third leg. So if it is bigger than, I mean, you guys, I don't want to sound arrogant, I don't want to sound cocky, and I don't want to mislead people and leave people holding bags, but the degree of confidence that I have that ZBCN is going to do a 100x is very high. It's very, very high. I'm very confident that we're going to see a 100x with this thing. And if not 100x, then something that's still immaculate, that's like close to a 60x or more. But I'm absurdly confident that we see a 100x or higher. Anyways, I got nothing else. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Okay, take care of yourselves and just be patient. We're almost there, man. We're clearly at the point of maximum maturity in this pattern. We're waiting. That's all. It's the waiting game, which waiting's great. Waiting's great. If you're DCAing, you're putting in money. A lot of people, I keep saying I'm going to end the video, but just hear me out. Okay, hear me out. Let's say you're invested in ZBCN. I don't know everybody's story. Maybe $1,000 is your maximum capacity you can invest in this thing. Maybe it's $100. Maybe it's $10,000 and $100 doesn't seem like a lot of money to you at this point, right? You got like $100 in your bank account, $100 left over from your paycheck. You don't know what to do with it, but you're just going to let it sit there because it's not worth investing in. Well, think about it like this: if Zebec goes to where we think it's going to go, right, which is 44 cents inevitably, that $100 right now could be worth $10,000, right? So like if you've got, not financial advice, not financial advisor, what got me on this thought is that we're moving sideways. This is ample opportunity to invest. Most people, though, whenever they're looking at a coin that they're holding, they won't invest in moments like this. They're bored, they're waiting. So it tries their patience, it tries their faith. They're like, I don't know if I should buy. And what happens is you'll break out and then you'll buy. Or it'll break lower and then you sell, or maybe then you buy. But we're probably not going to get that lower option. So instead of buying at a higher option, where that $100 still could stretch far, maybe instead it turns into $3,000, which is great. Why not snag the opportunity? And I'm using $100 as an arbitrary number because I think the average human being watching this video can probably scrap together $100 in any given, this is on a weekly basis, so any given 2-month period, you could probably scrap together $100. If you have the scraps, a lot of us as investors, we don't like to put the scraps in, but if you think about it, those scraps could turn into a lot of money down the line, right? If $10,000 is a lot of money to you, but $100 is not a lot, it's kind of like a fart in the wind. Take that fart in the wind and turn it into something that matters. You know what I mean? Like take that and seize that opportunity here. Moments like this where we move sideways are actually gifts, because they really are, especially for a coin like this. You can just DCA time and time again at a really good price, really like truly a good price. And we know it's a good price because from the high, the all-time high, to where we are now, you're down 47%. That's a hell of a discount. That's a great discount. And you're finding support consistently right above your prior all-time high. The structure is positive. It looks really good. The next move will be just as epic, if not likely more epic, than the prior move. I got nothing else for real this time. I'm done. So hit the like button, subscribe, take care of yourselves. I'll see you on the next one. Bye-bye.